Well, hello, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. I just wrapped up a two-day Inner Circle Mastermind Summit in Las Vegas. So you see the beds behind me? Yeah, I'm leaving Vegas today. The two-day summit was fantastic, our best one yet. We had about 50 people, and we spent the weekend just pouring into them, and what a great group it was. Maybe one day all of you will be able to attend one of those. But let me share with you what we got because I got an Uber coming to get me because I'm a leaving on a jet plane. It is June the 2nd. Quick reminder. Everything that we do here is for educational and informational purposes only. It is not intended as investment advice. So what's moving the markets? Markets are kind of languishing this morning. Trump is quote unquote likely to speak with the president of China, Mr. Xi, um, this week. If they get something hammered out on a permanent basis, that's a big win for the market. I think you'd see the market jump on that news. Steel stocks are moving higher on tariff threat. So now we are threatening a 50% tariff on steel. So the domestic steel companies are going crazy, but don't play that unless you want to bet that those jumps are going to reverse themselves. That's what I'd be looking for if there's a change in that tariff news. It was a really good month of May for the S&P 500, up 6.5%. Biggest moves since last November. 10-year Treasury, pretty steady at 4.462%. I'm always happy when it's under 4.5. It's just one of those benchmarks. So right now, that's a good interest rate for equities. And oil price has been going up on some news out of OPEC that they're going to maintain production where it is. They're not going to increase. So oil's at 63.15. I still think that there's some value in the oil patch. If you're looking for stocks to do covered calls on, I think that's an appropriate place. Market breadth last week was terrific. You look at advancers versus decliners. New York Stock Exchange 1925 versus 896. That's solid. What I'm more concerned with is new highs versus new lows. It's fantastic. 153 new highs, 59 new lows. That's a bullish market. On the Nasdaq, we had 2,792 stocks that traded higher, 1,872 traded lower. It wasn't quite the landslide on new highs and new lows, but we'll take it. 278 new highs, 204 new 52-week lows. What to watch this week? Busy week as it relates to, oh, look, there's an ad for my man, Jackson Brown. I actually had a chance to meet him. He is an all-time favorite of mine. Busy week. Relative to data. So today we had the manufacturing number come out. It was fine. It was as expected. Construction spending down 0.4. That's not optimal. But Fed speak on Tuesday, plus the jobs opening, the jolt. And I remember when there were more than 8 million available jobs. Last one was 7.2 million. So number of jobs are starting to shrink. On Wednesday, we get the ADP employment number. So this would be private payroll jobs. They're expecting that to jump by 112,000. And we get our ISM services number on Thursday. Initial jobless claims, they come out every Thursday. U.S. productivity, not expecting anything significant there. And then on Friday, it's a big day. We get the unemployment report. The current unemployment rate is supposed to hold steady at 4.2%. Wages are supposed to grow 0.3%, month over month. And we'll see what the year over year is. We want wages growing, obviously, faster than inflation. So last report is 3.8%, probably come in somewhere around that this week. But you're going to want to keep an eye on some of this data. It could move the markets. This is last week's heat map. Whole lot of green, led by Meta, Oracle, Palantir, Broadcom, Nvidia. All of them had fantastic weeks. GE up over 6%. Some of the software application was a little weak. Salesforce, Uber was down 4%. So year to date, more green than red, which is good to see. But some of the stocks that are in red are pretty much in trouble, led by United Healthcare. Ironically, I put a spread trade on that. I feel like the worst is in on UNH. Merck way down 23%. Tesla down 16, Apple down almost 20, Salesforce almost 22%. Industrial stocks have generally performed well. Then you got Palantir up 74%. Here's last week's winners. Palantir was on the list, up 6.87%. But Ulta Beauty, Hologic, Warner Brothers, Lamb Weston, Nordson. So all these were up about over 10%. Southwest Airlines, United, both up. Southwest is going to start charging for bags. Kind of changes the culture, doesn't it? Royal Caribbean and Oracle up 6%. There's always been this talk about, if you buy high PE stocks, that, they're not likely to move higher, that they're overpriced. But check out some of these PEs versus what they've done this year. So something that I prefer, instead of PEs, look at PEG. So it's the PE ratio divided by the earnings growth rate. Because some of these companies, the reason they're up so much is their earnings and or earnings potentials. Who owns U.S. debt? So there's this belief in the U.S. that all of our debt's owned by China. That's not true. Japan owns significantly more of our treasuries than China. And now the UK owns more of our treasuries than China. So we can see that, China's participation has dropped significantly. That might be part of the conversation that Trump has with China. Market sentiment fell last week. We went from 37.7% bullish, which is normal. We fell to 32.9. I think it's ironic. We had a great week in the market. So why this didn't go up, I don't have an explanation. And the bearish sentiment went up. Historically, when we ask independent investors, what do you think the market's going to do over the next 6 weeks? 31% say lower. We're up to 42% that are bearish. How much is the Fed going to cut? Right now, we are scheduled for 2 rate cuts in 2025. First one forecasted in September, and the last one in December. And then we've got 2 rate cuts right now scheduled for 2026. Sector returns year to date. So the S&P is basically flat, up 0.35% on the year. And the more defensive sectors have done the best. Utilities, though, in part, that's being fueled by nuclear development that would be associated with AI. Industrials, got to build those data centers. Staples, very defensive. Financials, very defensive. Communication, materials, REITs. So we've got, of the 11 sectors, 7 or higher. four lower, and the only one really getting stomped on, and that's not even too bad, is consumer discretionary. It's down about 7% for the year. Let's see what the charts have to say, because in the end of the day, it is all about the charts. I thought I would have SPX up here. I do. So this is a 6-month chart. So what do you see as you look at this chart? We had this V-shaped bottom, and we moved higher, and we kind of plateaued over here at pretty close to 6,000. We fell, we recovered, we've been moving sideways. We're still moving sideways. The other thing I will point out, if we want to draw a little trend line here, is that upper trend line is moving down. Lower trend line is moving up. And we are forming a wedge shape, which is a breakout pattern on the S&P 500. If you'd been in our class this weekend, you know all about that. We taught people how to draw trend lines. So a breakout pattern means we could be expecting a big move either to the upside or to the downside. And I suspect that breakout will be predicated on, drum roll please, news relative to tariffs, which has kind of been running everything. So in a bit of a holding pattern, let's see how things go this week with China and all this data that's going to get released. So we'll be following that day by day. Hope you will as well. All right. Till I see you next week. Be safe, be blessed. Those of you that were with us in Vegas, thank you so much. It was just an amazing time. You all did a fantastic job. All right. Bye.